It's time for Top That Trade. Joining us today, our top players, Phil Flynn, a Fox Business Network contributor, and Alan Nuckman, the chief market strategist at St. Paul Research. Here's your round number one for our trader game. Build it back. There may actually be an infrastructure spending plan sooner rather than later. So what stocks could be big buys in the build back?
Well, if you look at XLB, which is the ETF that tracks materials, it's already rallied. It's up there 20-year highs. So I'm going to go back and say it all comes back to commodities, as I've said 1,000 times on this show before. So if you look at XME, the ETF that tracks materials and mining, it's still below the halfway point of its move to the highs it made back in 2008. So I like that. 55 is the midpoint. We're at 40 right now. We got a lot of upside on XME.
Woo-hoo. And I think if you like XME, you got to like what transports XME. How about the railroads, buddy? I mean, if we're going to be rebuilding infrastructure, we're going to be bringing in a lot of commodities. You don't bring those in by truck too often. What you want to do is bring them in by Union Pacific, right? They're going to get a double bounce right now. Not only are we killed the Keystone Pipeline, that's increased their volumes on moving oil, but at the same time, they're going to be moving a lot of commodities. So that's a positive thing. But if you want to stick to the straight play on construction, go to PAVE. That's a great ETF, and that's one that you can jump into. Even though it's a bit high, I think it's going higher.
Round number two, growing up. First quarter earnings growth now expected at 20% and second quarter at 50%. Is this realistic for a recovery rally?
Well, if you listen to the Federal Reserve, the answer is absolutely yes. I mean, they upped their forecast for growth, not only this year, next year, and the year after, and you got the Federal Reserve behind us. Anytime you got the Federal Reserve basically putting their foot on the accelerator, that's going to be great for earnings. Now, one side note, you could see a higher corporate tax. That could hurt profits in the future down the road, but for the short term, until the corporate tax increase comes down, earnings are going to be great.
Growth. So we're talking about GDP growth of 5 to 8%. So it looks like growth everywhere. The problem I have is we don't often have high expectations. We usually do a lot better with low expectations. But let's see. I think stocks are still the choice.
Round number three, stupid trade. Multi-billionaire Ray Dalio says buying bonds is a stupid trade. What do you think about such a strong opinion? And in my opinion, he should replace the word stupid with silly. What's your opinion?
No trade is dumb. All right, let's just use that. Any trade, anything can happen. So as long as you have a plan, any trade's worth doing. And that's something I've learned over my last 30 years doing this. And Phil knows you never tell a customer not to do something because usually that's when something happens. But what he's talking about is buying 10-year notes when you're actually losing money because inflation's higher than your yield. That's what he's talking about. But I think it's smarter to do it here in the U.S. than it is to do it in Germany, where rates are actually negative. Italy, they're 0.75%. Spain, they're 0.4%. Japan, they're 0.1%. And UK, they're all 0.9%. So if you compare that, the S&P dividend yield has averaged about 2% over the last 10 years. Again, I still think it's stocks.
And I think the point he's trying to make here is that if you look at all the money printing that's going on in the globe, when you're borrowing money, you're getting paid back in dollars or whatever currency you're in that are going to be worth less. And there's probably better investments. Having said that, though, there are people near retirement right now that are probably trying to protect that nest egg, so the bonds might be an alternative that you would go to. But if you're a long-term investment, it's a really bad investment right now for bonds.
Well, let me say one thing. If America can't borrow money now with rates at near zero and GDP at 5%, there's essentially no time that you should ever borrow money. That's my 2 cents.
I agree with that 100%. This is the best time to borrow money. And I think even Ray Dalio said the same thing. He goes, hey, I'm not lending, I'm borrowing, because you're never going to get a deal better than 0% interest rates or where we're at today.
Wow, you agree. Here's your bonus round question for today. It's a tax time ticker. Thankfully, the IRS is pushing back the filing deadline date to May 17th. Can you pick the phony stock ticker? Will it be IRS, SAM, or O?
I think it's IRS. I think
it's IRS. But remember, you're paying taxes because you made money. So that's what you have to think about, big picture.
I'm glad you guys are both making money. The correct answer, however, was O. OWE. That's a phony one.
Oh.
But there's always next week, and we look forward to seeing you then. Business First AM continues with the final trade of the day right after the break. More Business First AM. Check us out on social media. We're on Facebook, YouTube, and Twitter. And go to businessfirstam.com for where to see our show on TV.